What's going on, guys? It's Justin from Push and Profit. Hope everyone's having a beautiful day today. Now in this video, I want to go over and explain what future markets are and try to explain it to the best of my ability so that the average trader could, garner a better understanding, right? I'm going to go over some real life examples on my computer, so stay tuned. So futures are derivative financial contracts that obligate individuals to transact an asset at a predetermined future date and price. So the buyer must purchase or the seller must sell an underlying asset at the set price regardless of the current market price at the expiration date. Now this may all sound crazy, but trust me, I'm going to go over some examples, okay? Now real quick, when we talk about the underlying asset that futures trade off of, they could be a physical commodity like oil and corn, or even like a financial instrument. We'll get into that. Also, when you hear future contracts and futures thrown around, they really just refers to the same thing. For example, you might hear someone say that they bought oil futures, and that is the same thing as someone saying that they have oil futures contracts. It's the same thing. When someone says futures contracts, they could be referring to, they're going to be referring to a specific type of futures such as oil, gold, bonds, S&P index futures. Now, an example of futures contract would be someone like an oil producer who needs to sell oil. They may use future contracts to do it. This way, they could lock in a price they will sell at and then deliver the oil to the buyer when the future contract expires. Similarly, a manufacturing company may need oil for making their products, and since they like to plan ahead and they always have oil coming in each month, they also may use oil future contracts. This way they know in advance the price that they will pay for oil. Now, someone who is trading futures, they wouldn't hold on to the contracts since they're very volatile, and because as a trader, you don't want barrels of oil or whatever commodity delivered to your home. So as a trader, you're pretty much, day trading them and profiting off the fluctuation of the price. So again, just to be clear, as traders, you wouldn't hold on to future contracts because they do expire and because they're volatile, right? So you just do intraday trades on them. Now in this video, I'm going to be focusing on cash futures like the S&P 500 futures and how to trade them. Now when you're trading and an S&P 500 future, you're spectating the underlying commodity, which in this case is the S&P 500 index, and if it's going up, and then your futures contract should go up as well along with the S&P 500 index, right? Now when you trade the S&P 500 futures, you're not paying to buy a share of the S&P 500 index. You're buying a contract that holds the value that you got in the market at. So if you buy a futures contract at like 3,100, you aren't paying that much to buy the contract, right? Now to trade futures, you're going to have a margin account because futures require that you use margin. In a sense, it's like kind of like a collateral to get control of the contract. Now, how much margin you need to enter into a futures contract will depend on a few features, like what futures are you trading, along with what broker you're using, and also what time of day, because there's intraday and after hours. All these factors play into how much margin you need. Now for the rest of this video, I'm gonna do some paper trading or simulated trading on the ES futures so that you guys could get like a first-hand experience in how to trade futures, and really it'll just be easier for me to kind of explain everything as I'm going through it so that you guys could see. And also I might take some trades on this simulated trade so you guys could see how much I make or how much I lose. So with that being said, let's go ahead and hop into my computer screen. Alright, so now we're on my broker, which I use TD Ameritrade, Thinkorswim, which I might change in the future. But anyways, this is the broker I'm using for this video. Right now we're paper trading or simulated trading. It is a bit wonky, I'm not gonna lie, in the sense that it's kind of delayed when you paper trade sometimes, because I'm on demand mode, meaning I'm going to the past and just trading some time in the past, right? So again, this is just like a simulated trade. It's not like I'm not trading with real money right here because this is just a tutorial, right? Now, right here, we're looking at /ES, which is the E-mini S&P 500 index futures. So we're basically just trading futures based off the S&P 500. Now, right here, when I click this drop-down menu, it's telling me that the initial margin requirement is 13,200 to, enter into, buy contracts, right? So that's how you could tell on TD Ameritrade basically. Now again, each broker is going to have a different price. I know there's other brokers out there that are way more cheaper to trade options. For example, I've heard of, I believe it's called Ninja Trader, where for $500 of margin requirements, you could, buy contracts of ES, right? Now, for TD Ameritrade, they just have it higher, right? Like I said, it varies on your broker, varies on the time of day, what type of futures, because if I hit this drop down menu, you could see that different futures require different initial margin, right? For example, the gold futures trading off, gold, they require $10,000. Then we have the euro dollar futures, they only require 300. Again, it really depends on the futures, the broker you're using, etc., right? Another thing to take note of is that this is really the price right here of the futures, right? You see it's 3,025.50. So for ES, they move in ticks of, and let me just double check, of 0.25. So each tick, you see how it moved from 0.50 to 0.75? So it moves in 0.25 ticks, right? So each tick, it tells you right here, is valued at $12.50. So if I buy in at 30,025.75 and it goes to 30,025 or actually 30,026 because another 0.25 ticks would turn this to 26. That would basically make me $12.50. And if it actually went one whole point up where it was 30,026.75, I would make $50 on one entire point. So a tick is for ES is 0.25 and a point is 4 ticks. So that would be, $50, right? Now, if you guys are not understanding the math, that's completely fine. I'm going to enter in a trade. Now, would I normally enter in a trade like right here? Probably not, but because this is just a tutorial, we'll just enter it because, again, it's not real money. I'm not going to lose anything. But I do see, it is hovering above the purple VWAP line and above the EMA line. So, whatever. Let's just go ahead and enter, right? I'm going to go ahead and click buy, single. And I'm going to go ahead and buy a single contract. And let's see if I get filled. And hopefully, if it takes too long, I'll just cut the video so that we could kind of see me getting filled. If not, I'll just move this up a little bit so I could definitely get filled. All right, cool. So right here is showing that I bought at, let me just go ahead. This is actually not the right thing. Let me go hold to active trader. All right, so I just had to cut the video because I had to set some things up. So I bought one contract on one contract long. I bought at 30,025.50. Again, or not 30,000, 3,025.50, right? Again, it's not like I spent 3,000, and it's also not like I spent 13,200. That's just the margin required to even buy a contract, right? So you can see that right now it's at 30.20. See, it just dropped down for a quick second to 0.25. So when it dropped down to 0.25, I was down $12. Now it went to 0.75. Oops, it's changing so fast. Like, again, future markets are very volatile, so they change. However, it is in the after hours right now, so they're not even as volatile as how they are in the day. Right, in the day they even move more crazy, but for, like I said, each 0.25 that it moves, I gain $12.50, as you can see right here. I'm up $12.50 because it went one tick up. Sorry, one tick, not a point. A whole point would be if it went a whole entire dollar up, right? Now, something that I recommend for trading futures, if you are going to trade them, is because of how volatile they are, I would always recommend to set a stop loss because you could lose a bunch of money. Just like I just made $37 in a minute or 2 minutes, you could lose a lot of money, especially when a big move happens, right? So I always recommend putting a stop limit. So for this sake, I'm going to put a stop limit at 3,019 right here. So I'm going to click sell, single, and then I'm going to go ahead and edit it. And I'm going to turn this limit order into a stop limit, right? So basically, I sent this. So basically, if it falls down here, it's just going to cut my losses, right? Because at the end of the day, as a trader, you want to mitigate your risk. So now it went up one entire point. Well, actually, yep. Now it just went down. It's so volatile. I was up $50. Now I'm up $37.50. Am I going to hold this play? How long should I hold this? I kind of want to give you guys like a real example. So let's just go ahead and play. So I'm going to say that right here is just going to be like a quick intraday resistance right over here. That when it goes here, I just want to take my money and get out, right? So we'll go ahead and just like stay holding it. And if it starts coming down, we'll just like lock in our profits. Again, on this channel, I'll talk a lot about locking in your profits, where if you make a profit and you're up, just take it out before you lose money, right? You never lose when you lock in profits. Right now, again, it's not really moving, kind of slow. Again, in the day, it is very, very volatile. But right now, it's the after hours. So things aren't moving crazy. I'm only up $50. Let's see what happens. Am I going to lose some fake money? Am I going to make some fake money? Let's go ahead and see. I might just cut the video because I don't want you guys to kind of just watch me sit here looking at this screen. It's kind of like fishing where sometimes you just wait till you get that catch. And yeah, so I might just cut the video. So right now, just to keep you guys updated, I'm up $75. I have my stop loss, but also have a stop limit. If this moves up just one more tick, it will lock in my profit. So if this goes to 3,027.25, it should automatically sell it if I get filled, and then lock in my profit. So we'll see. Again, I might cut the video if this takes a little longer, because again, I don't want to have you guys waiting. All right, cool. So we got filled. We made $100. That took about, let me see. I obviously cut the video because I wasn't gonna have you guys just watch me staring at the screen endlessly. But I that might have been like 5 minutes tops. So you could see how futures they are they could be interesting for individuals because imagine $100 in 5 minutes. I don't know any career or profession that does that, right? Again, there are risks. Now some of the benefits of futures, right? The stock market, it opens at 9:30 and closes at 4 p.m. Eastern time, of course. Futures, they could trade after hours. Like you could be trading futures at 3 a.m., at 6 a.m. I want to say that they're 24/7, but they're on. I do believe that on Sunday they do close, and they don't open again on Sunday till like 6 p.m. So as far as the timing goes, I don't want to say exactly what time they open and close because I might be wrong on that. So definitely just Google that. But for example, they do trade on like when the market's closed, right? So it's like 27, 24 or 5 or something like that, something of that nature, right? Don't attack me on that. Now also another benefit of trading futures is that there's no PDT rule. So this is what really intrigues a lot of day traders because, for example, if you don't have $25,000, you can't day trade a stock more than 3 times per 5-day rolling period, right? You're limited by the PDT, and I talked about that in a few videos. But with futures, as long as you have the initial margin requirements, for example, with this broker, it would have been 13,200. You could go in and out as many trades as you want. There's no limitations. And if you went to a broker that offered like a cheaper margin requirement, like the Ninja Trader, where it was like $500 just to trade some options on the ES. I mean, not options, futures on ES. You could with just $500 just day trade as much as you want versus with stocks you need 25,000 to day trade as much as you want. So that's another kind of intriguing thing that intrigues a lot of traders to go into trading futures. Again, they're very volatile. You don't want to hold because their contracts expire. They're very volatile, and you want to mitigate your risk. For example, I was in and out in 5 minutes to make the $100. Now if you guys have any questions on like technical analysis, like why did I draw this line over here? What is this purple line over here? What is this line over here? I have tons of videos talking about that, so just check out my playlist, helpful trading videos. I go over a lot of the things that I kind of briefly mentioned in this video, but I can't mention everything in one video, of course. Again, if you guys have any questions, definitely leave them in the comment section below. Make sure to hit that like button if you haven't done so already. And also, we do have a free Facebook group. It's a Push and Profit Facebook group. There, I post a nightly watch list of stocks that might have some potential to trade and make some profits off of. So definitely consider joining that free group. It's going to be the first link in the description below. And yeah, that's pretty much it, guys. Again, my name is Justin from Push and Profit. Make sure to subscribe, and I'm out. Peace.